What if I told you that in 2026, owning a normal house might secretly require a luxury level salary? Every night, millions of people open real estate apps thinking they'll find a decent starter home, and instead discover a 40-year-old house with cracked tiles, outdated carpets, and a kitchen that looks frozen in 2008, listed for $500,000 like it's some kind of bargain. And then comes the dangerous part. You start convincing yourself that maybe this is normal. Maybe everyone else figured something out that you missed. Maybe you just need to work harder, save more, hustle more, sacrifice more. But here's the truth nobody wants to say out loud. The numbers don't work anymore. Today, we're breaking down who can actually afford a $500,000 house in America. Not who gets approved by the bank, but who can buy one without turning their life into a 24/7 anxiety subscription. Because qualifying for a mortgage and comfortably living with that mortgage are two completely different universes. Let's start with the biggest illusion in modern real estate, the starter home. In many cities, $500,000 doesn't buy luxury anymore. It buys average, sometimes below average, a small backyard, tiny bedrooms, a commute that steals 2 hours of your life every day. Meanwhile, the median household income in the US is around $84,000 a year. So, somehow, society expects households making $84,000 to afford homes costing 6 times their annual income. If that sounds insane, it's because it is. Now let's talk about the down payment, the point where most people's homeownership fantasy crashes into reality. 20% down on a $500,000 home is $100,000 cash. Not investments, not future income, not potential. Actual money sitting in your account, and most Americans aren't even remotely close to that number. So people put down 5% or 10% instead. Sounds smart, right? Except now you unlock a bonus expense called PMI, Private Mortgage Insurance, which is basically the financial system saying, you're not rich enough, so here's another monthly bill. And that's before property taxes, before insurance, before maintenance, before the water heater explodes at midnight on a Sunday. Here's where the math becomes brutal. A realistic monthly cost for a $500,000 house in 2026 can easily reach over $4,300 per month once you include everything. And financial experts say housing should ideally take no more than 28% of your income. So what salary do you actually need? Roughly $180,000 per year to afford that house comfortably. Not survive. Not barely scrape by. Comfortably. And that's the punchline nobody talks about. Most Americans aren't shopping for homes they can afford. They're shopping for homes the bank is willing to risk approving them for. Huge difference. Imagine a couple making $160,000 a year combined. Sounds successful, right? Upper middle class. Good jobs. Stable life. But after taxes, insurance, car payments, student loans, groceries, utilities, and that massive mortgage payment, suddenly they're checking their bank account before buying groceries. That's what being house poor actually looks like. You technically own a home, but financially, the home owns you. Every broken appliance becomes a crisis. Every medical bill becomes panic. Every unexpected expense gets thrown onto a credit card because there's simply no room left in the budget. And somehow, society normalized this. People joke about eating instant noodles after buying a house like it's some funny adult milestone. But financial. Stress isn't a personality trait. It's not success. It's survival mode wearing a granite countertop costume. And here's the uncomfortable truth. The entire system benefits when you overextend yourself. Banks profit from your mortgage. Agents profit from the sale. Insurance companies profit from your policy. Nobody gets rewarded when you decide. The deal makes no financial sense. That's why nobody tells you the most powerful financial move might be walking away. Maybe renting for a few more years is smarter. Maybe buying a smaller house is smarter. Maybe protecting your peace of mind is smarter than impressing strangers on Instagram. Because real wealth isn't just owning property. Real wealth is having options. It's sleeping at night without wondering whether one emergency will destroy your finances. It's being able to save, invest, travel, breathe, and actually enjoy your life. So before you chase that $500,000 dream house, ask yourself one brutal question. Do you want a house, or do you want a life? Because sometimes the smartest financial decision is realizing the game is broken and refusing to play by its rules. If this video changed the way you think about money and home ownership, hit subscribe and join the conversation.